Friday, May 7th, 2021, Monaco 64, home of alternative economics and contrarian views. So we're seeing fireworks in commodities, especially copper, lumber, and some other commodities. Of course, we saw gold break through that 1800 level yesterday. I was watching the market yesterday. Gold was around 1790, 92. And then I went somewhere, came back, and it was at 1806. And it did pop. I said that a break of 1800 would trigger stops. And we went up to almost 1820 yesterday. We saw silver trade very strongly. We've heard from John Adams of John Adams Economics in Australia, who's been really on top of what's going on in silver. So this is what John Adams tweeted about 11 hours ago about silver and the situation on COMEX since 2nd of February 2021, when the silver squeeze movement began. More than 40.1 million troy ounces have left the COMEX depository warehouses. The silver squeeze movement is working. COMEX continues to bleed physical silver. We're winning the war. Keep buying. Yeah, keep buying physical. There's an interesting chart as well from one of the members of the Wall Street Silver Reddit group. And he's put this chart up. It's quite funny. It's got the silver back here. COMEX registered inventory and how that supply is dwindling, the warehouse supply on COMEX, and how the supply of PSLV is going up. PSLV is really the only ETF worth buying. It's run by Eric Sprott of Sprott Asset Management, or Sprott Inc. They buy real physical for every share of the PSLV that you buy. So you can see that it's quite clear what's happening here. People are getting away from paper silver and going into physical. I think it's just the beginning. We're still in the first innings or first battles of this war. So the other thing I would say is that what we're seeing right now, it's not just commodities going up, it's the fiat currencies resuming their sinking versus real things. And that's what currency debasement is. I've been talking about this or writing about this since 2007, way before I started this YouTube channel, as you can see here from this article in marketoracle.co.uk. I was calling for currency debasement, not just the dollar, but all fiat currencies. And yesterday, we saw not only gold trade through the key 1800 level versus the United States dollar, but we saw gold go back up above 1300 versus the British pound and up above 1500 versus the euro. So this is not just dollar weakness, it's fiat currency weakness. And yesterday, lumber made a new all-time high, as you can see here. Copper was knocking on the door of the all-time high, as I said yesterday. And this morning, as we look at the market here, copper is actually making an all-time high. High-grade copper traded up to 466, which is a few cents above the all-time high. So right now it's at 465.70. It's up over 1%. We're continuing to see gold trade higher here. We're up 0.25%, just below 1820. The high's been 1822.75. It has actually traded down to 1802 overnight, but it held that level quite well. Silver, for some reason, is down a couple of cents, which is a bit concerning, but I think it's going to be very hard for them to try to keep silver down, especially with what's happening on COMEX, with what's happening with copper and all the other commodities. Crude oil is rebounding this morning as well. It's up about 25 cents, but still below the recent high, just above 66. That's WTI. Yeah, silver right now is at 27.26. As I said, down a couple of cents. The high has been 27.57. As I said the other day, though, this 27 level is quite important. We haven't really traded much above 27 in the last few months, so we're in relatively elevated levels. Of course, we're way below the all-time highs of 2011 and 1980 at 50. And we know that copper and silver are related as metals. Most silver is actually mined from copper mines as a byproduct. So there aren't that many silver mines out there. And talking about silver mines, I saw yesterday that Hecla Mining, which is one of my holdings of miners, declared a small dividend prior to the open. And I think Hecla Mining was up 15 or 16% yesterday. They declared a 1 1/8 cent dividend per share, which is good. I think that's going to continue. Not just silver miners, but gold miners are going to start declaring dividends. So you're actually going to be earning real money by owning these companies. I'm not here to give you the exact companies to acquire, but I recommend you go to Crescat YouTube channel, Crescat Capital. Tavi Costa does videos regularly there with other executives and advisors of Crescat, and they talk about the miners that they're looking at, especially the exploration, very junior companies. So they might not pay dividend, they might be a little more speculative. But one thing I advise or recommend people to do if they want to know which companies to buy is to go through the prospectus of big funds like the Sprott Precious Metals Fund, or even go through the prospectus of GDX and GDXJ and see what companies are in there and study them. Pick the ones that you think are interesting, the ones that have a very high market cap, or the ones that have very low. Mix it up. That's what I would do. That's what I did. That's how I got involved, just through studying other people, and maybe also listen to King World News. He always brings a few mining executives there. So what about the stock market? We saw the Dow made a new all-time high yesterday, which was the headline news, of course, for mainstream financial news outlets, people like investing.com, Bloomberg. But if you look at the NASDAQ, the NASDAQ is not confirming that, nor the S&P. I think it's a distraction to stock market. Yes, it could go higher, but I think commodities are going to go up a lot faster than paper assets. There's still a huge rebalancing to occur between real things, tangible goods, which are represented by commodities, and paper assets. We're still at multi-decades low commodities are relative to paper assets. And as you can see here by this CRB chart, we're just starting to break out. The CRB, of course, includes gold, oil, all the major commodities. And even though gold is not reaching an all-time high, for example, like copper is right now, or lumber, gold actually broke out of its base back in 2019, if I'm not mistaken. That base had a resistance around 1375, and as you see here, CRB, that's breaking a similar kind of base. So there's so much room to the upside in commodities and tangible assets that it's not even funny. So we're just starting to see the debasement of the fiat currencies here. So today we've got non-farm payroll, the US jobs data, which you need to understand is only a survey. They don't go out and ask all the major employers in the US how many people they employed or sacked or things like that. It's just a hypothetical survey and they extrapolate the number. They don't count a lot of people that are discouraged, that haven't found a job for years. I don't think they count the people that are in these programs where they're getting paid to stay home. So these numbers are doctored by the government, by the statisticians, to basically fit the picture that we're having a very nice recovery, that there's no inflation problem, that it's a reflation. And we might see volatility in the markets when that number comes out, and we usually do. It comes out at 8:30 a.m. Eastern time or 1:30 p.m. London time. So that will be the next hurdle, I think, for commodities. But I don't think anything can stop commodities right now because, yeah, they're just reflecting the very loose inflationary or loose monetary policy of all the major central banks. And there is no way out, even though you're going to hear a lot of central bankers talking about tapering QE, maybe start raising rates, but they'll say in a few years' time we'll have to do it. But they will not succeed in doing it unless they want to bring the whole system down. They'll have to keep inflating. It's too late. It's inflate or die, right? It's the old adage there. So what else is going on? Yeah, this morning the stock markets are a little firmer, but pretty much unchanged. So I won't go through them, actually. The stock markets, they're fairly quiet. The currencies, we got sterling up 0.25% at 139.25. The euro's up 0.1 at 120.78, and the dollar's unchanged versus the yen at 109.08. The dollar continues to drop versus the yuan. What about the commodities? Well, yeah, high-grade copper is near all-time highs here, just around 466. Oil is at 64.81, up 0.25%. And let's have a look at some of the charts of the commodities so you can see how crazy this looks. And I think even coffee starting to go up quite significantly, as you can see, another weekly chart. We're still far away from the all-time high in coffee, but it's moving. It's a multi-year high, as you can see. Wheat, same thing, same kind of setup. Still not near the all-time highs, but multi-year highs. Corn, same story. So this is not just copper and lumber. This is widespread. This is a sign that things are not really great in fiat land, I would say. Soybean, look at soybean. So what about the base metals? Let's look at aluminum or aluminium. Same kind of story. What about nickel? Nickel, same, off the recent highs, but picking up as well. Zinc as well, multi-year highs here. And as I said earlier, look at high-grade copper making an all-time high, breaking the all-time high from February 2011. So to finish off, let's look at the 10-year yield, which is really spooky. I'm sure the Fed, the Treasury, the major banks, they're doing some kind of yield curve control. They want to keep the bond market quiet. Even though we're seeing an explosion in commodity prices relative to fiat currencies, bonds are doing nothing. 20, 30 years ago, the bond market would be having a tough time. Prices would be dropping and yields would be going up. But it's an artificial market. It means pretty much nothing on the 10-year yield. It's at 157. It's unchanged. So there you go. Hold on to your precious metals. It's going to get wild from now on. It looks like the race to the bottom is back on for the fiat currencies. And I've made a few videos about how you need to hold on to your precious metals, gold and silver, for dear life in the bull market because it gets really choppy and scary. And before I finish off, just to let you know, I did a really great interview, I thought, with Brecht Arnert yesterday. You can look up on my channel. He's a PhD candidate at a major university in Madrid, Spain. He's originally from Belgium, and he focuses on the Austrian School of Economics. I interviewed him last year in April, so it had been 13 months since I last spoke to him. I think you will enjoy this interview because he has some real contrarian and unusual views, which you might not agree with, but I think you need to give him the time of the day to explain himself about his views. And I like most of his views. I probably don't agree 100% with what he says, but I think you enjoy it. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day and a great weekend. Take care. Bye.